Hey, this is Yossi, I run a small investment firm that specializes in REIT investing, and in a recent video I explained why I think that Trump's victory was bad news for realty income. That's because his tariff proposals could have a particularly negative impact on its three biggest tenants, Walgreens, Dollar General and Dollar Tree. We think that dollar stores and pharmacies will be some of the worst impacted retail categories because they import a lot of goods from China, they are facing growing competition from larger players like Amazon and Walmart, and they serve a lot of low-income consumers who cannot afford significant price hikes. Moreover, these tenants have already been struggling in recent years, operating on very thin margins, leaving little room for error. Unfortunately for realty income, these retail categories are some of its biggest investments, and we think that it's likely to weigh down on its market sentiment as we get more and more headlines about tariffs in the coming month. And today, unfortunately, I have further bad news. I just had the privilege of interviewing Agri Realty's CEO, Joey Agri, for High Yield Landlord, which is my REIT newsletter, and he explained to us that realty income's biggest tenant, Walgreens, is in even bigger trouble than the market seems to understand. But before I go into that, here's a quick word from our sponsor, High Yield Landlord. Over the past year, I've had the privilege of interviewing the management teams of some of the most prominent REITs, including Realty Income, Vici Properties, Stag Industrial, and many more. These exclusive insights have helped me and the 2,000 members of High Yield Landlord build a portfolio of what we believe to be the best REIT investment opportunities for 2025, and today I'm excited to give you access to it completely for free. Simply click on the screen and you'll be redirected to High Yield Landlord, which is my REIT newsletter. Sign up for the free trial and you'll instantly unlock access to my personal REIT portfolio, all my top picks for 2025, and much more, all free for 14 days. You can cancel anytime, no questions asked, but if you decide to stick with us after the trial, you'll also secure a special discount for joining today. We are proud to be the largest online community of REIT investors with over 2,000 members actively growing their portfolios with REITs, and I want you to be part of it. With REITs trading at historically low valuations at the moment, there has rarely been a better time to invest in this sector, and we think that 2025 could be a particularly rewarding year. Join us today completely risk-free and see why our members have rated us 4.9 out of 5 from over 500 reviews. I can't wait to welcome you inside. Okay, back to the video. I want to highlight to you a specific segment of our interview with the CEO of Agri Realty concerning Walgreens. We asked Joey Agri, what do you think are the prospects of a successful turnaround for Walgreens? And he answered, negligible. Then we followed, negligible, good to know. What are the odds of bankruptcy? What do you think? And he answered, probable, highly probable. And keep in mind here that Agri Realty used to generate 25% of its rental income from Walgreens back in 2012, so few people understand this company better than Joey Agri. It used to be their biggest tenant by far, but they saw the problems coming and aggressively reduced the exposure, which is today just 1%. He thinks that Walgreens will go bankrupt just like their close peer Rite Aid, which filed for bankruptcy earlier this year. He then added that we are over-pharmacized in this country, just like we are over-screened for movie theaters. We have to be right-sized, and the next big step in that right-sizing process will be Walgreens bankruptcy in the medium term. He's confident in this prediction because the majority of Walgreens stores are today losing money. They have 8,000 plus stores, but according to him, only about 2,500 of them are actually making money. This is obviously unsustainable, and to get rid of their unprofitable locations, they may have to go through bankruptcy. If he's correct, this will without a doubt have a big negative impact on Realty Income's market sentiment, given that it is its biggest tenant. Just recently, NAREIT, which is a close peer of Realty Income, dropped by about 15% just in a few days after it announced that two of its small tenants were facing issues, causing it to miss about 1.5% of its rental income. These are not even top 20 tenants for NAREIT, and yet its share price dropped so much anyways because it will hurt its growth prospects in the near term. Walgreens is a far bigger tenant for Realty Income, and therefore the impact on its market sentiment could be even bigger. And the bad news doesn't end here. Joey Agri also holds a negative view of dollar stores. When asked if they would be interested in buying out one of their close peers, he explained to us that they are not interested because of their high exposure to dollar stores as one of the reasons. We asked him, are there any publicly listed REITs that Agri Realty would be interested in buying at the right price? And Joey agreed, maybe as a donation. What we saw was a number of publicly listed REITs go up the risk curve, deviate from their core competencies, add material exposure to tenants and sectors, pharmacies and dollar stores most notably, that don't conform to our underwriting standards. We don't want to buy anybody else's problems. And I really think that this summarizes Realty Income's story. Their massive size made it increasingly difficult for them to grow, and this forced them to go up the risk curve. They deviated from their core competencies and added exposure to riskier sectors like dollar stores and pharmacies. While Joey Agri didn't specifically mention Realty Income here, he sure seemed to be describing them to us. So with all of that in mind, is Realty Income today a buy, a hold, or a sell? And it's a tough question to answer because it really depends on who you're asking. If you're an income investor and only care about the dividend, then now could be a decent time to be accumulating shares of Realty Income. It's priced at a historically low valuation, a high dividend yield, especially relative to its close peers like Agri Realty. Historically, Realty Income has commonly actually traded at a premium relative to its close peers, but today it's the opposite, and that's because the market has correctly priced the growing risks that Realty Income is facing. But even if Walgreens filed for bankruptcy, I still think that Realty Income's dividend would be sustainable. It would probably slow down its growth and hurt its market sentiment, likely leading to a declining share price in the near term, but the dividend wouldn't go anywhere. Often the best time to buy blue chip dividend stocks like Realty Income is when they are facing temporary issues that are causing their stock to trade at low valuations, and that could be today. But if you're a total return oriented investor, then I continue to think that there are better options in the REIT sector, and this is the main reason why we don't own Realty Income at High Yield Landlord. It's going to be interesting to follow how Realty Income will deal with this problem and how the market will respond to it. I would expect them to gradually lower the exposure to both pharmacies and dollar stores over the coming years by divesting some of their properties, also while aggressively investing in other retail categories. I think that Realty Income's management is very good, and I'm sure they will be proactive about this. However, I fear that this could weigh down on their market sentiment, increase their cost of capital, slow down their future growth, and this could ultimately lead to further underperformance relative to some of their close peers like Essential Properties Realty Trust, Agri Realty, and so on. And so once again, this is why we are not owning Realty Income today. That's all I had for today. Now if you want to access our full interview with Agri Realty CEO, as well as my personal REIT portfolio, all my trade alerts in real time, you can join us at High Yield Landlord for a 2-week free trial. It will be the first link in the description of this video. Otherwise, if you thought that this analysis was useful, please click the like button, subscribe to the channel, that helps me a lot. Thank you very much and see you at my next one. Bye bye.